Hello everyone. Welcome to the Stock Minds web channel. In an era defined by the exponential advance of artificial intelligence, high-performance computing, and ever-expanding data center infrastructure, Advanced Micro Devices, NASDAQ AMD, stands out as a compelling growth and value play. With its recently reported Q3 2025 results and longer-term guidance, AMD offers an intriguing combination of strong recent momentum, a favorable valuation lens, and a clear strategic pathway. For investors seeking exposure to the AI chip or infrastructure ecosystem with both upside and relative prudence, AMD merits a close look. In this video, we will dive into AMD recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Advanced Micro Devices. Founded in 1969, AMD is an American semiconductor company headquartered in Santa Clara, California. Over the decades, it has evolved from producing basic logic chips to becoming a major force in CPUs, GPUs, server processors, and AI accelerators. Its key product lines like Ryzen, Radeon, EPYC, and Instinct serve a wide range of markets, including data centers, gaming, PCs, industrial, and automotive. AMD continues to reposition its business toward adaptive computing and the rapidly growing AI infrastructure ecosystem. AMD Financial Performance. In Q3 2025, AMD delivered strong financial performance, reporting revenue of $9.24 billion, up 35.59% from $6.82 billion in Q3 2024, while quarterly EPS rose to 75 cents, a 60.27% increase from 47 cents a year earlier. On a trailing 12-month basis, revenue reached $32.02 billion versus $24.29 billion in Q3 2024, up 31.82%, and TTM EPS climbed to $2.02 from $1.13, rising 78.79%. Free cash flow per share TTM surged to $3.34 compared with 95 cents, an impressive 251.58% increase. Profitability remains solid with a gross profit margin of 51.46%, net profit margin of 10.32%, and free cash flow margin of 17.01%. AMD has 2.6% return on assets, 5.32% return on equity, and a very low 0.06 debt-to-equity ratio. Over the past 5 years, AMD has grown its revenue at a 28.4% CAGR, net income at 6.4%, and free cash flow at 44.9%. AMD's financial performance is still projected to grow rapidly in the future, as strong demand for AI chips will continue to drive the company's business growth. AMD Fiscal 2025 Financial Forecast. Looking forward, analysts project AMD's 2025 revenue to reach $33.93 billion, a 31.59% increase from 2024's $25.79 billion, while forecasting non-GAAP EPS of $3.96, up 19.77% from $3.31 in 2024. Wall Street analyst maintains a bullish outlook with a buy rating, with average price target of $276.76, suggesting a potential upside of 12.13% and a high-end target of $380, implying 53.96% potential upside. AMD stock price performance and valuation. At the time this video was created, AMD stock was trading at $246.81 per share. The stock has gained an impressive 77.7% over the past year, significantly outperforming the S&P 500's 13.2% increase in the same period. Over the past 5 years, the stock has risen 203%, again beating the S&P 500's 87.6% gain. Despite this strong performance, AMD's valuation remains reasonable relative to its growth outlook, with a PS ratio TTM of 12.51, forward PS of 11.84, non-GAAP PE TTM of 66.17, forward PE of 62.26, and a PFCF TTM of 73.75. Based on Fiscal.AI data, if we look at the valuation over the past 5 years, The forward PS and forward PE are above the average, while the PFCF is below the average. Although these multiples appear elevated, they are supported by AMD's rapid revenue expansion, accelerating earnings growth, strengthening cash flow, and low debt levels. Given its significant leadership in AI, data center computing, and next-generation processors, the valuation is justified by strong future growth potential. AMD growth potential. AMD growth prospect remains strong, driven by several factors. 1. Data center AI acceleration and GPU market dominance. AMD's data center AI segment is the fastest-growing part of its business, with guidance projecting over 80% annual revenue growth through 2027. In Q3 2025, AMD posted record data center revenue of $4.34 billion, a 22% year-over-year increase fueled by strong demand for its Instinct MI350 GPUs and 5th-generation EPYC processors. The MI350 GPUs are ramping faster than any previous AMD product and are already deployed widely at major cloud providers like Oracle, Google, Microsoft, and Alibaba. The company secured a landmark multi-year deal with OpenAI to deploy 6 gigawatts of Instinct GPUs, with the first gigawatt launching in H2 2026. AMD also partners on sovereign AI projects with G42 in the UAE and the U.S. Department of Energy, validating its platform and expanding addressable markets. The MI500 GPU series roadmap for 2027 ensures continued leadership. 2. Server CPU market share gains and EPYC processor momentum. AMD's EPYC server processor line has reshaped the data center market by gaining significant market share from Intel. In Q1 2025, AMD reached 39.4% of the server CPU revenue market, a 6.5 percentage point increase quarter-over-quarter, with forecasts suggesting it will surpass 50% within 3 to 5 years. Q3 2025 saw record highs for EPYC processors across server and desktop, with 5th-generation EPYC Turin chips accounting for nearly half of EPYC revenue. Major hyperscalers deployed over 160 EPYC-powered instances in Q3, including AWS, Google, Microsoft, and Alibaba, highlighting strong market adoption. The EPYC ecosystem now covers more than 1,350 public cloud instances worldwide, growing roughly 50% year-over-year. AMD's next-gen Venice CPUs are engineered for higher AI-focused performance, density, and energy efficiency, supporting continued growth as enterprises prioritize optimized AI infrastructure. 3. Client and gaming segment revival with AI PC integration. AMD's client and gaming segment generated $4 billion in Q3 2025 revenue, marking a remarkable 73% year-over-year increase. This surge was fueled by record Ryzen processor sales and strong gaming GPU demand. Gaming revenues soared 181% to $1.3 billion, boosted by higher semi-custom console revenue from PlayStation 5 and Xbox, alongside robust Radeon GPU sales. AMD's AI PC initiative has expanded rapidly, with Ryzen now powering over 250 platform designs across major OEMs like HP, Lenovo, Dell, and Asus. Upcoming processor families Gorgon and Medusa are expected to deliver up to 10 times AI performance improvements over earlier Ryzen AI models. AMD targets capturing 40% of the client revenue market by 2027. With over 1 billion AMD-based gaming devices worldwide and leadership in consoles for 3 generations, AMD's strong ecosystem supports sustained above-market revenue growth, especially as enterprises increasingly adopt Ryzen AI technology. Risks to consider. While AMD stock looks like a compelling investment opportunity, we should be mindful of potential risks. 1. Intense competition. AMD faces fierce competition from Intel, Nvidia, and Broadcom, pushing the company to adopt aggressive pricing and discounting strategies. This competitive pressure challenges AMD's ability to maintain healthy profit margins while striving to grow its market share in CPUs, GPUs, and AI chips. Balancing competitive pricing with profitability remains a critical challenge as AMD navigates these rivalries to strengthen its position in key segments like data centers and gaming. 2. AI adoption challenges. Weak customer conversion from AI chip trials to large-scale orders and uncertainty surrounding AI market growth pose risks to AMD's revenue and profit forecasts. Although AMD projects aggressive annual revenue growth above 35%, driven primarily by AI data center chip sales, the actual expansion depends on turning initial interest into substantial deployments. Execution challenges, competitive pressure from NVIDIA, and geopolitical factors further cloud the scalability and margin outlook of AMD's AI business. 3. Regulatory and trade risks. Ongoing export controls on advanced semiconductors significantly impact AMD's global sales and supply chain costs. In 2025, AMD anticipates a $1.5 billion revenue loss due to tighter U.S. export restrictions on high-performance AI chips to China, a market constituting about 25% of its revenue. These measures require licenses for shipments, increasing operational complexity and raising costs. Additionally, AMD faces an $800 million charge related to inventory and purchase commitments affected by these rules, which also depress gross margins by 11 percentage points. Conclusion: AMD's strong financial performance, accelerating earnings growth, and expanding free cash flow highlight a company executing well across high-demand markets such as AI, data centers, gaming, and advanced computing. Its solid balance sheet, low debt, and compelling analyst forecasts further strengthen the long-term outlook. Despite a premium valuation, AMD's continued innovation and market leadership support its investment appeal. For growth-focused investors seeking exposure to the expanding AI and semiconductor landscape, AMD remains a highly attractive and recommended opportunity. But remember, this is not a financial advice. What do you think about AMD? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.